Game-changing advice, the keys to riches, and taking action on this episode of Unlock Your Wealth Today. Your life fully invested. Welcome to Unlock Your Wealth Today, your life fully invested. I'm your purveyor of prosperity and host, Heather Wagenhals, and on this episode, I'm making success simple with the keys to riches. And yes, I have Wall Street's millionaire maker herself, Hilary Kramer, dropping by to give us some game-changing advice and talk about her new book. But let's talk about the keys to riches. First off, let's get this out of the way because the keys to riches is a baker's dozen of financial concepts that teach you how to think like the rich and be in control of your own money. It also gives you specific techniques to create or fix your credit, eliminate debt, save and invest, all while transforming your current financial habits into healthy money management skills. We do this one key at a time, 1 week at a time here at the Unlock Your Wealth Show. And for those of you that want to go in depth, well, you've got to go to Instagram and follow us on Instagram at Unlock Your Wealth and check out our Instagram TV channel because we go live on Wednesdays at 7:30 p.m. Pacific. And we drill down on some of the specifics that this week's key has to offer. And the bonus, because it's live and it's Instagram, you can hop on the broadcast and ask questions. Last week's key, we started off with our acceptance and affirmation key, and we spent about 40 minutes, I think, between all of the stuff that was going on the show. So I'd love to have you again this coming Wednesday, where we will discuss this second key, which is take action, make assessment. So if you have ever gone green in your life or done something organic, well, we're going to do an organic assessment of our finances. And I know that sounds kind of like, what? How do you assess finances organically? Well, you're going to learn with my biology-based approach to success how we do it here and why it's critical that we assess our finances in this fashion instead of the traditional forensic method where people, oh, well, let's just take a look at the last 3 months of spending. Because there's something different that goes on when we do it that way versus my organic way. So I'd love for you to join us so we can talk about what it is that you need to be doing and how to properly assess. Because when we do this organic assessment, we are not looking for the what happened or how much. We're looking for different things because what goes wrong with our money has nothing to do with money, and it has everything to do with our behaviors. And so we're going to assess something a little bit different, and that's why we have to go green and do it in an organic way. So join me on Wednesday at 7:30 p.m. Pacific, and we'll talk all about it on Instagram at Unlock Your Wealth. And if you take the time to DM me, either on Facebook at Unlock Your Wealth TV or on Instagram, I'll be happy to send you the strategy for that week's key for free. Yes, indeed. So you got to do that. But I don't want to keep our guest waiting anymore because we have a spectacular woman joining us. I'm super excited. We have Wall Street millionaire maker Hilary Kramer. She is one of our featured experts. We're going to talk about her ideas for 2020, and we're also going to take a look at her new book and figure out some of the advice that she's giving in her new Game Changers book, which is named after one of the newsletters that she publishes regularly. So let's take a moment and chat with Hilary, shall we? Hilary, welcome to Unlock Your Wealth Today.
Heather, thank you so much. Pleasure to be here on such a wonderful market timing week, and this market is just on fire.
Well, and it's a curious one too, and I know that I want to talk about your book today because I can't believe you found the time to write one with the zillion litany of newsletters that you produce. But let's talk about briefly, what is your take on the market, especially with the political concerns right now? And are my stocks okay for 2020?
For the first half of 2020, there should be no fear, and definitely for the next 3 months, not a problem there, because we have the Federal Reserve that is keeping the market propped up. they might not be cutting rates anymore, but they're doing this complicated repo program, which is basically the equivalent of cutting rates and but basically it keeps the market doing well, robust. And so have no fear that way. Plus, you know how they say, like, fake it till you make it? That's really what happened. And that's that the market, finally reacted and really likes these lower rates. And it created a lot of investment, a lot of acquisitions, a lot of money spent to start new companies, and a lot of expansion because companies, whether it be, Starbucks or, advanced micro devices, have been able to expand and build. That means more people hired. And then plus, the four horsemen of the NASDAQ, especially Amazon, Google, continue to hire, continue to grow. Amazon, of course, has a labor intensity to it, and that's been a really, big help for the employment rate. So have no fear. Now, the second half of 2020, as we get closer to those November elections, if it looks like President Trump, with the pollsters, is not thriving, then we're going to see that market start to slip really fast, because for right now, the Democrats who look like they are, in the lead. I mean, Biden would be considered, a sort of middle of the road Democrat, but when you're talking about Bernie Sanders, or
Right.
Elizabeth Warren, this is going to scare the market. It's going to spook the market. Those tax breaks made a huge difference. Matter of fact, look at our deficit. Our deficit had a historically up year because the tax breaks made that much of a difference in cuts for companies, but not adding money, obviously,
Right.
to the consumers.
So, there's this, a big article, I don't know, it was towards the end of the year, talking in the Wall Street Journal that I saw, that talked about these companies that are doing these stock repurchases. Those companies going to fare well through all of this next year that have done that? Because it made their bottom lines look better without really increasing revenues or things like that. And I think
That's
that was the
right.
biggest challenge.
You reduce the number of shares out there, and suddenly when you report your earnings, which are based on earnings per share,
Right.
everything looks so much better. And then executives get their bonuses based on that. Well, the party's going to be over soon enough, but at the same time, a lot of the borrowing to reduce the share count, they just can't continue at that pace, because ultimately, if rates rise, borrowing gets more expensive. And I have seen the statistics. We hit the peak towards the end of 2017, and then they slowed down 2018, and then they slowed down more in 2019, but it still has its impact. Heather, it's actually a great question about this, reducing those shares outstanding. There's going to be an impact, and the impact is that the companies can't continue to do it and aren't continuing, to repurchase, and yet they have to pay that money back. So if there's a downturn in the economy, all bets are off.
Okay, because I was wondering, we've got the Fed kind of in line now, realizing, okay, maybe we need to leave well enough alone for a little bit, and we've got the curious political climate, and then, as you know, a single tweet can rock the market for a day or so. So I was curious as to what your take was on that. Any other particular outlooks or
Yeah.
prospects for 2020?
Yes. So net, expect at the very least the first 4 to 5 months of this 2020. We're already almost halfway through January. You should expect to see, even mid-single digits, on the upside, with continuing to hit all-time highs, and the market has this group think going on. So don't have any fear, but I want everyone to know that when tax season comes, that's what in April of 2000 brought down the internet bubble. What made that bubble burst? What happened? What happened was there was selling to there had been so many gains, selling took place, uh, and that around April 15th, starting 3 weeks earlier. So expect that we might see the same situation. Of course, this isn't this like frothy, crazy handful of, stocks that are what I call game changers,
Mm-hmm.
that are going up. I mean, this is really across the board, everything that's hitting all new 52-week highs. But that being said, it doesn't mean that the whole market doesn't come down, because also the rules have changed and there's a lot more passive investing. So, the percentage of investors and institutional investors that are just they're just riding an S&P 500 index has risen so much that if the market comes off, it'll have a very similar impact. So, and that's my message for everyone, is make sure you have cash set aside. If you've made a lot of money in this market, there's nothing wrong with taking some gains, put that cash aside, and then think of it like, when the market really goes down, it's my opportunity to pick up companies I've wanted to invest in.
Yes.
Pick up the companies that are, so to speak, on sale.
Yes,
And
the bargains. Where are the bargains?
that market. But what I will say is retail is a disaster. So in my book, I think that there are some babies that have been thrown out with the bathwater,
Mm-hmm.
like Big Lots. The ticker symbol is big, BIG, excellent dividend yield. The stock is going to definitely rise above $25 a share. So we have 25% in there. The numbers are fine. It's single digit revenue growth, opening new stores. There's some traction there, and the company's trading. So many of these retailers are trading like they're going to go out of business, and some indeed will. I mean, we keep hearing news now. In January 2020, the big news was Pure One, looking to file for bankruptcy, and we had a whole slew of others, from Forever 21. Of
Mm-hmm.
course, the year before we lost Toys R Us. So it's been, it's been a tough year. You read about all of the companies, and some don't actually even file for bankruptcy. Like, take something like Dress Barn, which is part of a bigger company. They just shut down all the Dress Barns.
Right.
So you don't really know it as that. So everyone should be careful in retail, but at the same time, look for those opportunities.
Mm-hmm.
And this will be the year of biotech. Biotech is the
Mm.
outstanding, that's going to be your big winner, right? It's not going to be the cloud computing companies. It's not going to be Salesforce.com, CRM, which has just been phenomenal. Your big winners are going to be these biotechs that now finally have therapeutics that are applicable, that are actionable, and it's really exciting, especially in, such horrible diseases like cancer.
Well, and I know, and it's one of the more exciting areas because we have all this technology. You would think that we'd be able to start doing some things like curing cancers, like solving some of these like crazy virulent strains of bacteria and viruses, and
Oh,
that.
C. diff, which kills half the people. Half the people who die in the hospital, they're not dying from
Mm-hmm.
whatever their problem is. They're getting, infections. I mean,
Mm-hmm.
the hospitals have done an amazing job at infection prevention, but that still doesn't mean that C. diff itself, this horrible, infection that's hospital, and
Mm-hmm.
that impacts those that are immune immune compromised, has really, been discovered. So, but now is the time. Now is the time you are going to see some of these companies, DTIL, Precision Diagnostics.
Mm-hmm.
Expect that, I think, to be a double. There's another one, VIR, Biohaven. Biohaven Sciences, BHVN, they're actually based in New Haven, therefore Biohaven is, they're, to me, the final frontier in many ways is neurology.
Mm-hmm.
And they have medication for migraines, which are
Oh.
really an epidemic. We don't hear a lot about them anymore because there's so many medicines that help deal with the pain, But at the same time, their medication gets to the root of what's actually causing the migraine and tries to actually, prevent it from the beginning.
Mm-hmm. That makes a big difference for folks. Now, you had mentioned as we started to approach this subject, your game changers that you call them,
Mhm.
and where you found time to write a book on top of I don't know, how many different newsletters
Ah,
do you
my
have now?
book. Here's my book.
Yay! I have the
Just
paper
for
version of it that I printed out the cover.
Yeah, thank you. January 7th. You can buy it on Amazon and Barnes and Noble, at Hudson bookstores, and all the airports. Well, it's really very exciting. You have to realize this is what I do. This is what I spend my life doing.
Mm-hmm.
I spend 24 hours a day, 7 days a week. My love, my passion is the market and finding the companies that are going to be the big winners.
Mm-hmm.
That being said, it's not always these up and coming companies. Sometimes the winners are companies that are kind of, rebirthing themselves, so
Mm-hmm.
to speak. There's always that classic story about Corning was this glass company that just seemed like it was just withering away, but ended up
Mm-hmm.
providing glass for the iPhones.
Right.
So you have a lot of that going on. Hey, look, I think Boeing in the $330 range right here, Boeing's going to be a $500 stock probably in the next 2 years.
Mm-hmm.
Boeing right now is at 330. It's $110 off of its all-time high.
Mm-hmm.
So really, everyone should realize that a company like Boeing that has been, just considered, it's as if that it's like got some kind of contagious disease. Everyone's
Right.
dropping so quickly. It could be the next big, huge winner next year and bring up the whole
Mm-hmm.
Dow S&P 500. Let me tell you why. Because in many ways, they are a game changer company because we now have not just the Navy, the Army, and the Air Force, right? We have an outer space division in the military and all of this. And then, of course, we have commercial, individual interest in space travel. Boeing's at the forefront of this.
Mm-hmm.
Boeing is the company. So we should really think that when you think about game changers, it's not always the companies that have really good stories that are just doing an IPO. And I have an IPO newsletter. So I can tell you, I know those IPOs. Very often it's the company that you least expect that has figured out a way to reinvent itself and
Mm-hmm.
be at the forefront of major changes that are taking place. So that's why think about the game changers. It's not just the smaller companies. Of course, those are incredible. Like, for example, some
Right.
of the security companies, all of our wars are going to be fought on a cyber level because even in terms of the deployment of weapons and weapons of mass destruction, it's all done with computers. So if it can be a situation where, cyber defense companies that are up and coming might have a role in that, but at the same time, it might be Raytheon,
Mm-hmm.
RTN. So we always have to think of the really big picture because the defense companies actually have the money to deploy and they know that they can get the contracts if they
Right. Because they have the
technology.
established relationships. You're making me,
Right.
as you're describing this, it's making me think of Colin's book, Good to Great, and some of those other companies that had these big turnarounds that made all of the difference. And he did that incredible research project to be able to write that book. So that's what I'm thinking as you're talking about game changers. I'm thinking, wow, okay, so this is something that we really should be paying attention to because it's not just about the IPO and there's still other ways to make money in the marketplace. In your book, you talk a little bit about fundamentals of investing. How do they help us with cashing in on catalysts?
Um, so cashing in on capitalists. So at the end of the day, what you want to do is follow the leadership, find the leadership, always watch the management teams. Look for those that are really the great mavericks in terms of leadership, and make sure that anything that you invest in really is not just a multi-million dollar winner, but is truly, as I say in the in right in the book, billion dollar trends, right?
Mm-hmm.
That's what you want to look for.
Mm-hmm.
Billion dollar trends are, um, you know, cloud, cloud software, cloud computing. Billion dollar trends is biotechnology.
Mm-hmm.
Billion dollar trends that are the humanization of our pets and animals,
Mm-hmm.
as well as also in that same category, um, making sure that, we're going towards organic, we're going towards the beyond meats, and that it means that, some of the companies that have been leaders, whether it be in fertilizer or in animal feed, whatever it might be, could be tomorrow's big winners.
Mm-hmm. So, one of the things that you address in your book is technology in the different areas. But what do you mean when you say technology is out of the bag now? Is it, I mean,
Technology, we all know technology. I mean, technology, so much of technology is, we're already there. That's why we have to look for the next big things, I mean, the technology for the cloud computing, for AI, for data mining, it's twofold. One is that is how our lives are led now, right? That's how
mm-hmm.
everything is driven.
Yep.
Is
I got my
technology.
device right here.
But at the same time, I have another message in there, which is if technology is out of the bag, then what is it that is going to be the next big driver? Okay, so that's why I go back to the biotechnology, right? That's why I go back to, again, cybersecurity. There's going to be incredible focus on privacy and privacy software,
Mm-hmm.
and privacy protection as we go forward. It's actually very interesting. 2019 to me had some really major landmarks, and one of them was that company WeWork that
Mm-hmm.
never really got off the ground, and looks like if it weren't being supported by its backers, could certainly be in bankruptcy, but the support is there. And WeWork is just the concept that's been around for decades of shared office space use.
Mm-hmm.
For as long as I can remember, headhunters, human resource people, recruiters always were in shared offices, but WeWork came around and made it cool and hip,
Mm-hmm.
and kind of combine the whole concept of being social and kind of mixing with others. And why did WeWork take off in that sense? Well, because we are so isolated from others. We are so intent on using our technology and not interfacing, that a company like WeWork, that was enough to get billions of dollars of investors. At one point, WeWork was worth $40 billion.
Oh, the
Okay, like,
valuations were insane.
yeah, but how much of it, and it wasn't a new concept, right? And so this is where the imitation, these theories
Right.
on imitation come in. And this is where the theories on look at what society is missing, and then you can find what, and then as you look at different trends that are just peeking out and starting to emerge,
Mm-hmm.
you can find the ones that are going to be multi-billion dollar ones, because society needs that. Society needed Starbucks,
Mm-hmm.
right? The coffee shop, the coffee shop coffee wasn't enough.
Right.
Dunkin' Donuts wasn't enough. There was this need and interest in a higher end, higher quality,
Well, and
millennial.
craving a connection, I think, I think that that's why Starbucks and WeWork and any type of business that focuses on gathering. I remember about 20 it's 2020. So I remember at the turn of the century, like in 99, Faith Popcorn came out with her popcorn report. And what was the thing that she talked about was this isolation, this growing distancing because of technology. And back then, we didn't have nearly the engagement that we had. Technology was not as pervasive as it is today.
There wasn't even really texting on our flip phones, on our flip
mobile phones.
At that point. It took another 2 or 3 years to get to that point. So, and yet, she saw it. Look, John Nesbitt, Megatrends. And look,
God, I love that guy. Megatrends China, too. That was another powerful one.
I think of myself as in that category, even though my expertise is picking those stocks, I've just taken it a step further. I'm going to tell you what's going to happen and where you should invest to make money. Right? That's my gig.
Well, yeah, and we're really grateful that you have made it your life priority to be able to study the markets. We just had one of your newsletter colleagues on kicking off the season, Jim Woods, and he talked about how that's what he does. Everywhere he goes, there's an opportunity for him to discover a new investment, whether he's going out to eat or shopping or what have you. For those of us that do what we do best, and for me, that's write and speak on the topics of money, but I still rely on your financial advice when it comes to picking stocks, because I can only study so much.
Thank you. And Jim Woods is absolutely right. I can tell you that at this point, there was a time where Wall Street did know better. They had access to information, and they had such professionals doing research, seasoned professionals with decades of experience in analyzing companies and their industries. But now you can do so much better off just on your own. Wall Street doesn't really like Texas Roadhouse, TXRH, which is a casual dining restaurant that specializes in kind of country food. You got your steaks and your beans and your fries and big, huge drinks. And a pretty cheap bill there, a lot, even less than the Cheesecake Factories, on a nice low level, but yet casual dining. I mean, this restaurant chain it looks like it's trading like it's going out of business, but anybody who goes to Texas Roadhouse will tell you that there's so much appeal because of the how cheap it is, how local it is. They have their own baker, they have their own butcher, the waiters and waitresses do line dancing, and the drinks are massive, and it works, and there's money to be made. And so that's why Jim is right. Just look around, and you can be way ahead of Wall Street.
Well, I'm so glad that you took time out of today, because I know that everybody's trading right now, so you're not working when you're over here horsing around with me, but I'm so grateful.
I'll go back to my screen now.
Yeah. Well, I'm grateful that you took the time to be a part of today's show. And tell me where folks can get your book.
Just go to Amazon or barnesandnoble.com, at Barnes & Noble, but Amazon, just stick Hilary Kramer in. You don't have to put Game Changer Investigators. Put Hilary Kramer even just into Google, and you'll come up with the book, and you'll come up with my newsletters, and you will be able to have the opportunity to enjoy both of those.
Yay. Well, again, it's been exciting having you on. And folks, remember that if you want her book, or she's one of our featured experts here at the Unlock Your Wealth show, all you have to do is visit Hilary's show page to get the links to her newsletters, her new book, and so much more. For the maestro of Moolah, Michael Terry, I'm Heather Wagenhals. Now go out and unlock your wealth today.
UnlockYourWealthToday.com is produced by Heather Wagenhals and the Unlock Your Wealth Foundation. UnlockYourWealthToday.com and its affiliates are copyrighted 2018 with all rights reserved. For more information on the Keys to Riches Financial Wellness Series, please visit our website at www.unlockyourwealthtoday.com.